I hope you are able to see the presentation. Can you just confirm? Can someone confirm? Okay, great. Okay, so this is the first slide. This will be something like an investing 101 class where I'll introduce you to certain things or the stepping stones that you must take when it comes to personal finance and investing. I think I need to admit few people as they come by, so just bear with me. Uh, okay, not sure how to do that at this point of time, so I'll just continue. I'll do it as people come. That's fine. So, okay, what's today's agenda? I just want to cover a couple of things. Why one should invest? Before investing, what are the things that you should take care of or you should consider? And once all those things are taken care of, then you can think about investing, where to invest, and so on. Okay. Uh, what else? So I just want you to consider a situation first in your mind. Imagine that you are a person, or we'll think of this imaginary person. This person has a salary of, let's say, 50,000. Okay. And he has a certain expense. Let's say I mean, the rent, food, transport, shopping, medical, etc. So all these things actually account to almost 30,000 rupees per month. Okay. So he saves about 20,000 rupees every month, and that is his savings. And he is a person who wants to invest. So along in this example, we'll consider a few more things. Let's say this person works in a company, right? So he is going to be given a hike of 10% every year. Let's say he is spending 30,000 rupees this year, but
35 years is 420 months.
oh, sorry about that. Yeah, sorry. So he saves about 20,000 per month. His salary increases every year by 10%. Similarly, his expense also increases every year by, let's say, 8%. That is like the cost of living is increasing by 8% essentially. Okay. Let's imagine that he is close to our age gap. So let's say he's 30 years old, and what he wants to do is at the age of 50 he wants to retire. So त्याच्या उसके पास almost 20 साल है retire होने को, and at the age of 50 he will retire, and once he retires he does not want to work. So essentially after 50 he just wants to live his life, does not want to work, does not want to do anything else. Okay. And these are his only expenses, no other fancy expenses. That's it. So what happens if he actually let's say what happens when he actually just what happens in the next 20 years essentially. So I want you to take a look at this table. Okay. So this is the snapshot of the things that happen to him in the next 20 years. uh, in the first year he's earning 50,000 per month, so his yearly income is 6 lakhs. He's spending 30,000 per month, so एक साल में he's actually spending about 3 lakh 60,000. So if you take the difference, that is the amount of cash he has at the end of 1 year, which is like 2 lakh 40,000. So that's fine, good for him. What happens in the next year? In the next year, he's going to get a hike. 6 lakhs के salary पे 10% hike मिला. So 6 lakh 60,000 उसका annual income है. What is the yearly expense? Yearly expense उसका 8% से बढ़ेगा, because what do you call it? महंगाई. So the cost of living is increased by 8%. That will amount to 3,88,800. So if you take the difference, it's 2,71,200. So each row represents a snapshot for that year. So at the end of 20 years, and in the last year, if you see it, he will be actually earning 36 lakhs per annum. But his expenses account to 15 lakhs 53,652. And the savings will be the difference of these two, which is 21 lakh rupees and so on. So essentially, these are the cash retain is the excess or surplus cash that he has at the end of every year. And let's say he does not invest anywhere. Okay, he just keeps he keeps that money just with himself, and in the form of hard cash as a okay. So what happens at the end of 20 years? He would have accumulated 1.78 crore rupees in 20 years. Okay, that's fine. 1.78 crore rupees seem like a very big amount to us right now, but we are looking at it at the of 20 years later. Okay, that's first thing that you need to understand. Second thing you need to understand is that at the end of 20 years उसका साल का खर्चा खर्चा 15 लाख रुपए है. So 1.78 crore rupees is going to only last for 8 years post retirement. So at the end of the 8th year after retirement, he will be around 58, and he's going to be in a very tight spot with literally no savings left to back him up essentially. Okay, so he's in a very tight space here, I would say. Uh, so that's one thing when you do not invest at all. Does anyone know what is the expectancy of a person living in India? Uh, that's 69 years, 69.5 years roughly, and that's in 2019. And he's 58 years old. He has no money. He has to, on an average, he has to stay for 10 more years. He has to depend on someone for his financials to be taken care of. And so far, his only expenses were basic necessities like food, house, transport, medical, and shopping, etc. So I would say this is not a good space to be in. What happens actually if you invest? So he has certain cash at the end of every year. Okay, and what if he actually puts it in certain asset, let's say an equity asset like stocks, or let's say he puts it in an FD or in some place. Let's imagine that the interest that that asset gives him is 12% on an average. So so this is the situation in that case. So he had 22 lakh 40,000 rupees in the first year as an excess amount. Okay, imagine he puts it in an FD, and if that FD pays him 12% every year, that 2,40,000 will be kept in that FD for next 20 years. So that amount in next 20 years will become 20,67,063. So each row essentially has four types of information. फर्स्ट वन इज कि वो साल में कितना कमा रहा है. सेकंड वन, साल में कितना खर्चा हो रहा है. थर्ड वन, उसके पास what is the difference of these two, basically how much cash he is retaining, that is the third column. And if that entire amount of cash is kept in an FD, then at the end of let's say 20 years, what is the amount that it is going to be equal to. Okay, so that is the fourth column. और इन सब का टोटल करोगे, then you will see that the total actually now comes out to be 4 crore 26 lakhs, or roughly 4 crore 27 lakhs. So the cash balance essentially पहले 1.7 crore था, अब 4.26 crore rupees है, which has become significantly larger now. That is 2.4 times the regular amount that he has. Okay, and this is a much better situation for your post-retirement life. So that essentially is what I want to tell. Why you should invest. You would want to build a corpus at the end of the defined time period. Here, the goal of in the previous example, the goal for him was retirement. So he wants to be financially free. He wants to have that financial freedom at the end of his career when he's retiring, so that he does not have to depend on anyone for money. That's first thing. This is what investing in your future is. And more importantly, the reason why you are investing is to fight the growing cost of living. Okay. In the example that we have taken a look at, the cost of living actually grew by 8%. That is what we call as inflation or महंगाई. And we want to invest in a certain form of asset which are going to give you more return than the inflation essentially. So I hope that is a convincing argument on why one should invest. Uh, okay. Moving to the next part. So, okay, even before you get started to invest, there are a couple of things I want to let you know. Uh, there are a couple of things which are very important that has to be done, and I feel they are kind of a mandatory before that you should do all these steps before you start investing and saving and etc. Okay. Uh, One of the, I mean, we will talk a lot about stocks and investments, but before we get there, the main thing that we have to think about is what are the bare necessities, uh, the protection you need in case something goes wrong. Uh, so let's, for example, what happens? Okay, just to give you an example, let's say you are a person who has recently brought a car and he has taken a loan for it. You are earning a salary. Every month you take the salary, you put aggressive, your plan is to uh, close the debt, this close the loan account as fast as possible. So you are essentially taking all the money that you are saving from your salary and putting it to close this loan account that you have. And suddenly what happens when you lose your job? Okay, there is no money in your savings account because you have used to pay off your debts, and there is no money for you to survive. So point number one, you should have an emergency fund that is going to take care of you in adverse circumstances, like when you don't have a job. You are healthy, but you don't have a job. That's one thing. Just give me a minute. Okay. Yeah. Second thing, what happens when you are unhealthy? Okay. Or someone in your family becomes unhealthy. They need to be hospitalized. Okay. For just to give you example, let's say someone from your family gets a heart attack, he has to be hospitalized. Okay, and then there is a process of angioplasty, etc. And the total cost comes out to be 3 lakhs, 4 lakhs, 5 lakhs, and so on. Suddenly, whatever money you have saved in your life, that is going to vanish. Okay, and that is not a place where you want to be. If something happens to you, or whether or not you are going whether or not you have a job, you need to get covered, and you, not necessarily you, but you and your family. And this is even more evident in the age of corona, and we will come to that. So essentially, I'm talking about the importance of a health insurance. Okay, and the third point, um, is also very important in terms of what happens to you in case what happens to your family in case you die. Okay, so someone needs to take care of your family in that case, and you should have, I mean, they are going to need some money to survive if all of them are dependent on you. So that is where the term insurance comes into picture. And I feel that health insurance, term insurance, and emergency funds are the key parts of any financial plan, and evidently, even more evidently in the times of corona, when things have changed dramatically. Okay. Okay, there's, I think, one thing that I actually missed here. So prepare, I think the first part is something that I missed, where the groundwork you do before you start investing. So there are two things that you need to do. First is you need to have a good understanding of how much you earn and how much you spend every month. Okay, that should be very clear to you in your mind. And second thing is getting rid of your debts. There is no point in doing investing without getting rid of your debts. Uh, I think that is something we'll take a look at first. I mean, everyone understands the importance of paying off your loans, right? Uh, I just want to give a certain example. If you are a credit card user and you are using credit card regularly, you are paying an interest of 10.5 to 25% towards repayment of your of that loan. There is not going to be any investment instrument that you can use to get a higher return than this 24%. That's next to impossible. So it's better if you start paying down your debt, and you should pay the one which has the highest interest rate first and then slowly go down from there. So that's just a general guidance. But I just hope you understand the importance of paying off your debt. Second thing, I mean, just to continue with our discussion, emergency fund, right? So this is something, this is a new fad essentially. Uh, did our parents have emergency funds? Uh, no, they did not. Um, I feel like this is the era of YOLO. You only live once, and people usually follow their passion, and they do not want to live a monotonous life. Okay. Um, we are going to take more risk, more responsibility, which does sound fun, but that is just one side of the coin. The other side of the coin is unknown. You do not know what's going to happen when things go wrong. Okay, and you should have certain emergency fund in case things go out wrong. And so essentially, when you don't have a job, this is the money which is going to pay back, help you survive essentially. And then there are certain, say, general rule of thumb of how much you should have in your kitty, how much you should put, how much money you should put aside for these kind of extreme, extraordinary situation. Typically, the rule of thumb is if you are a salaried employee, you have very good understanding of how much salary you are going to get. So generally, and how much expense you have. So generally, you should have about 6 to 9 months of your expenses in the form of a savings account, in the form of money in your savings account. So let's say in the previous example, he had an expense of 30,000 per month. So he should have about 1,80,000 rupees kept separately in his savings account. तो उसके सेविंग्स अकाउंट में almost 1.8 to 2 lakhs होने चाहिए. And this is the money that you should not worry about how much interest I'm getting on. This is something you require at the time of emergency. Don't think about it as an investment. Don't expect any return on this, but keep that 2 lakhs aside in case anything goes wrong. You can survive on it. So that's one thing. In case of a in case of person who is self-employed or who is doing a business, his outcome is kind of uncertain. I think you should go with 9 to 12 months of your expenses inside your saying with I mean 9 to 12 months of your expenses should be kept aside uh, for your emergency funds. Okay. So what I have done is I have opened an account in NeoX. I'm not sure how many of you guys know, but NeoX what do you call it? It's a form of an online bank. Uh, and here I have parked, so you don't even have to go to any branch and as such. So I have opened an account in NeoX and I have transferred my liquid emergency fund in that, and I have kept it. So one good thing about these kind of banks is also that RBI is going to have an insurance that if such banks, I mean, they default or they fail, RBI has an insurance that up to 5 lakh rupees they are going to cover. So all the money will be returned provided it is less than 5 lakhs. So I feel which is slightly more comfortable for me, and hence I have put it here. So you can also consider that, or any savings account of your choice will also do. So that's one thing. Couple of things. Booking vacation tickets is not an emergency. Getting new clothes is not an emergency. And it's you at some point of time you are going to have this temptation to buy these things. So it's better not to have these funds in the same savings account from which you spend. Keep it in a separate account. Okay, so that's first part. Coming to health insurance, I just want to help you understand how big deal is having a health insurance or insurance for that matter is from financial planning or investment point of view. Typically, in a regular private hospital, you are going to, if you do an open heart surgery, it's going to cost between 2 lakhs to 4.5 lakhs. Uh, if I remember correctly, I think angiography, angiography I think costs around 10-15 lakhs, but angioplasty would cost around 2.5 to 4 lakhs and so on. So it's going to be very huge. I feel that you should not s- break your savings account whenever such kind of emergencies happen. You should have instead have an health insurance and let those guys cover for you in such extreme scenarios. Um, I feel that everyone should start investing in health insurance as soon as they get salaried or have a consistent source of income. That's point number one. Um, I also wanted to give you some understanding. So since you're going to buy these kind of insurances, you should have some understanding about how do these work, what are the different types of insurances, and if you're going to get it from your agent or any online businesses, they do not, I mean, they do not fraud you out. So essentially, you should have some understanding of how it works and basic differences and points, etc. So typically, your health insurance can be divided into two types. One is the indemnity plan and another is the fixed benefit plan. Uh, Indemnity plan is what we generally think of when it comes to health insurance. Let's say you get hospitalized, someone is going to pay for your hospital bills up to certain amount, that is called indemnity plan. Okay. And fixed benefit plan का मतलब है, let's say you get hospitalized or you have certain disease, the insurance company will just give you a certain amount in lump sum, irrespective of whether you are getting a treatment or not. So that's the basic difference. And just to give you an example of a fixed benefit plan, let's say there is a personal accident plan or a critical illness plan. You must have heard of it. So critical illness plan के अंदर typically 6 to 65 type diseases cover होते हैं, and let's say cancer is one of them. So let's say you get cancer, they are going to give you whatever 15-20 lakhs as a lump sum amount, and they're going to put it in your bank account, and it's not necessary that you spend on your treatment, but that is what they are going to give, irrespective whether you use it for treatment or not. Similarly, personal accident plan also exists, and let's say you actually have an accident, they'll give you around 10-15 lakhs, whatever sum assured they have mentioned in the in health insurance. You are just going to get that. So, I mean, typical, this is the broad view of the two types of plans. Uh, but I think the more important thing or the thing that you might be concerned is you are young, you are 26, 27, 28, and so on, and you are perfectly healthy, right? You are young. Um, we should be more worried about our parent at this point of time, and what about their health insurance? Okay. So this I feel is something which will be on your mind too. So just wanted to cover that up. Um, the number of options, health insurance options that you are going to have at the age of 55. Okay, let's say if it is 100, then by the time you become 60, it will be 50, just 50. By the time you become 65, it will be just 25. And by the time you become 70, there will be hardly any insurance provider who is going to give you an health insurance. So getting health insurance for your parents before they turn 60 is very important. Ideally, you should get or start thinking about their health insurance by the time they are between 50 to 55. Okay. So invest in your parents' health insurance as early as possible so that you can renew it for lifelong. And I mean, typically all these plans are renewable for lifelong. Okay. What else? Okay. Okay, part two. Another advantage, I wouldn't say advantage, but just a benefit of having a health insurance is you can get, you can claim tax benefits. So I think if you have a health insurance for your parents, you can claim up to 50,000, if not up to 25,000, and so on. So this is just first part of it. I think another important aspect would be how much health insurance should you have, right? Uh, because they're only going to cover your expense up till certain point, right? So I feel that you can start with a health insurance plan between 5 to 10 lakhs as the total cover that they provide, depending upon your city. So I think people, if anyone is staying in Bangalore, the cost of, I mean, the hospitalization cost is going to be typically more than that of the person in Mumbai. So just keep that into your mind while getting a health insurance plan. For salaried employees, I think you might already be having a corporate health insurance policy. Uh, I think every corporation typically has that for their employees. They'll get a group health insurance policy, and on in that they will have this thing. Uh, they'll have certain amount covered, let's say 5 lakhs for every person and so on. I would really suggest you to go through those health insurance policies at least once to understand what's covered and what's not, because this has happened to me. In 2019, my father was hospitalized. We went to the hospital. We took a private room, single private room over there, uh, because because we did not know what the rules were and so on. Because we had an health insurance, we thought why not go for it. Later we came to know that they only cover hospitalizations, and they'll only cover the room cost if it is a shared room, or if it is a private room, then it is covered. There is a cap up till which they will cover. Let's say up till 4.5K every day they will cover. If your single room costs more than that, then you'll have to pay the difference. So just keep that in mind. These kind of things can happen to you. So you should have some understanding about what is present and what is not inside your um, basically in your health insurance. Whom you should buy? Actually, you can buy health insurance from anyone. You can also buy it from your agent. That's okay. There is not much difference in the amount of premium that you pay when it comes to online or offline buying. So go buy it from anyone who gives you an unbiased advice. Just a rule of thumb. If he is pushing you to buy a health insurance from a certain company, he is a biased person. Uh, One last thing, I don't want to, I don't think I have enough time to go under what a top up and super top up is, so we'll skip that part as of now. But I think one final advice that I have for you guys is if you are if you are smoking, or if you have any, if you were a smoker, let's say even 4 or 5 years ago, you should mention that in the form, because typically these health insurance plan have a certain period, let's say 3 years or 2 to 4 years, there is certain period, and in which if you have a certain precondition, a precondition is detected and you go to hospital to get cured for it, they will reject your claim. So it is very important that you disclose all your preconditions here. Uh, if you have anyone who like if you have a maid or driver, please help them by educating them. So that's also one thing I wanted to cover. Okay, what else? I think enough about health insurance. I think you can go through this once. There's not much useful info I think in this part, but we can go to the next part now. Okay, term insurance. So typically, I'm not sure how many of you are even aware what term insurance is. Uh, Most of you guys might have an LIC, and I think that is what might come into your mind when someone says term insurance. And I'm very sure that all of you would have at least one LIC policy which is sold to you by your uncle or a distant relative. Okay, and they always pop up at your house whenever you get your first job. Okay, so uh, that is something what you would have, but I would say term insurance in is slightly better than your existing life insurance policy. So I'll come to that in some time. Uh, So I'll also cover what should the total coverage be when it comes to term insurance and so on. I think I'll go to the next slide and then we can come back here. So I think these are the points that we will cover. What's sorry. Yeah. So these are the points we will cover. So let's look at them one by one. Um, so simply put, term insurance is what your family gets in case you die. Okay. And so I'll just let me just explain you how does a term insurance work and why does a company sell it to you first. So essentially, you are not going to get any money back after the tenure of the term insurance is complete. Okay. And so so every month you are going to pay a certain premium against that for that term insurance, or every year you are going to pay that premium, and they are going to provide you a certain coverage, and for a certain period of time, let's say until you are 60, you buy this term insurance. So once that period is over, they are not going to return you a single penny. Okay. So that's why it's a profitable product for them, and that's why they sell it. And if you disconnect or discontinue your policy in the interim, they again do not pay you anything back. Okay. The only way you are going to get any money back from a term insurance is when you in an unfortunate accident or event die, and that too within a stipulated contract period. Okay. And so that's one thing. So just to give you an example, let's say you buy a term insurance for 1 crore. Okay. 1 crore का टर्म इंश्योरेंस है. इन केस यू डाई, तो आपके आपने जिसको नॉमिनी बनाया है या फिर आपके डिपेंडेंट्स, दे विल गेट 1 crore. And in return, let's say you're taking it until you're 30 and you're taking it until the age of 60. So you are going to pay premium for the period of 30 years, let's say. And the premium will be typical around 15,000 per year or so. So this just to give you an example of what kind of premium would you be paying and what kind of coverage that you will be getting. Okay. Um, that's one thing. What else? What else do I have? How much coverage is enough, and how much insurance companies will give you? Okay, so essentially, uh, so I mean, just before even going to that, I just want to ask you, what age, till what age do you think you should get a term insurance for? Okay, that's first question. Um, would you get it till the age of 80? Because you want to make sure that you get certain money in return whenever you die. Because I think since you know the average age of the life expectancy of an Indian is 69 years, 8 years is very far-fetched, and you know that it's highly likely that you might die before that, and you will get a basically that amount, some assured amount. So would you go till 80, or would you just go till 60 or 50 as such? Um, just answer that question, I would say the reason you buy term insurance is because you want to take care of your dependents or debts. So let's say you have a family member, or you have spouse and children, and they are financially dependent on you. Okay. So if you have a dependent, then you should get a term insurance. Otherwise, you don't even need a term insurance. And secondly, people in India retire at the age of 60 or so. After that, they are not going to generate any money, right? So you are not going to make any money after the age of 60, then it does not make sense to have a term insurance beyond that period, essentially. So I would suggest you, if you're getting a term insurance, get till the age of whatever age that you think, or let's say 60 when you retire, or even before that if you feel you are financially independent now. Okay. If you have other investments that are going to take care of your dependents in case you die, then you don't even have to continue with your term insurance and so on. So that's one thing. uh, yes. Yep. Yep, that is absolutely true. So actually, the thing is, yeah, that's one thing. uh, One and another thing I wanted to tell. just give me a second. Uh, okay, I don't have that data with me right now, but anyways, I'll share that with you in some time. So that's one thing. Another thing is you should also have, let's say you actually are you have bought a house, okay. You are paying EMI on that house every year, okay. You have one term insurance, let's say. You have an unfortunate incident and you die. Now the term insurance money that you are going to get, it's actually going to be diverted to pay off that house debt that you have. Otherwise the bank will actually take that house away from you. So dependents have no other choice but to either pay off that debt or give up that on that house. So typical the rule of thumb is you should have two term insurances, one to take care of your dependents and another to take care of all your loans in case you die. So two term insurances you should have. Um, Typically have it till the age of 60 or till the age where you have until the age you feel that you are financially independent. Um, what else? How much you should have? How much term insurance should you have? Let's say if your annual salary is 10 lakhs, then how much term insurance should you get? Or let's say if your annual salary is 5 lakhs, how much you should get? So the rule of thumb here is that you should get around 10 to 25 times your annual income. So if you are earning 5 lakhs, then I feel you can go up till the 50 lakhs, a term insurance of 50 lakhs or a term insurance of 1 crore. I think that should be good enough for you because your family expenses are going to be low. So you can still, I mean, the term insurance amount can be less and you will also enjoy less premium. So that's one thing. Another thing, uh, I think we can go over the rest of the things later. But just one last point that I want to tell you here is you should, if given an opportunity, please do personal medical tests, get all the preconditions known. Because in case you don't mention a precondition, you hide it or you don't mention it because you did not know it and you suffer, you actually die because of that, your family is not going to get any money back. So very important that you do not lie on these forms and also get your uh, this term insurance. I mean, that's one thing. And one last thing I want to tell you is some of you might be considering that why should I pay a premium to the agent? Why not just go online and buy it from a business? To all those people, I just want to ask you one thing. You can go ahead, do that thing, but just keep in mind, in case you die, you are not going to be there, and it is your spouse or significant other who has to do all these things, who has to go ahead and make a file a claim, get all the procedure done, etc. So just keep in mind that you might be tech savvy or financially savvy, but your dependents might not be. And if they are not, it's better to get it from an agent. Also, pro tip, if you're getting it from an agent, consider getting it from someone who's younger than you because then they would have a greater chance to outlive you. So in case you die, they would still be around as opposed to taking it from an older person. So that's one thing. Uh, I would not get into much details in case of ULIPs and all, but essentially ULIPs is unit link investment policy. इसका मतलब whatever LIC guys sell you, that is a ULIP. Uh, it is a investment cum insurance policy. तो उसमें what they will do, 30% of your premium is paid is used to provide you life insurance and 70% is invested into your stock market and this will keep on happening. Let's say you have an LIC policy of 10 or 15 years, okay. In that 15 years, if you die, then you will get a coverage, whatever cover amount they'll give you, whatever you call it a sum assured, they'll pay that to you. And if you don't die, then at the end of 15 years, you are going to get that maturity amount or maturity benefit, okay. Um, if you go on any website online, you will get to know that this is an extremely bad instrument when it comes to investing or getting a life coverage. लेट्स से यू हैव, अगर LIC में तुम प्रीमियम लेट्स से 15,000 का प्रीमियम देते हो, then typically in case you die they will pay you 10 times of that premium, so you'll only, your family will get 1.5 lakhs in case you die, which is ridiculously low. Okay, term insurance अगर लेते हो तो you could have gotten 1 crore, here you are getting 1.5 lakhs. Why? Because only 30% of that goes towards your uh, to provide you life coverage, and rest is actually invested. And even if you invest that, they invest in certain debt instruments and other index funds and etc and so on, which do not yield good returns at all. Okay, so my humble request to you guys is, in case someone comes to your house to sell you an LIC policy, please do not get it. Instead, you should get a term insurance and also get one index fund or a mutual fund, and a combination of these two will give you a really better return as compared to ULIPs. Okay, so the LIC policy is extremely costly way of investing, and also you do not get a good risk coverage. So that's the thought on LIC. You could go on any website, you will find the same thing mentioned. So I think we have talked a lot about these small things that you need to do before you complete your and even before you begin your investment journey. Uh, I think once you are through with all these three things, only then you should consider investing. Otherwise, there is no point in investing. That's one thing. Um, Now finally, let's say you have taken care of all these things and you have decided to, okay, I'm going to start investing. Fine, you have certain savings, and but actually, even before that, you need to have certain things, I would say, to invest, right? If you are earning 25,000 or 30,000 per month, you are spending 80, you should typically save at least 20% of your salary in your 20s, 30%, in your 30s you should do it 25%, and in your 40s you should keep at least 30% of your salary as savings. So if you are not doing that, you should start doing this, because you are going to need money to invest first of all. So ये कर लो. Uh, okay, I think this is my favorite slide, because this gives some perspective about how invest, the just some perspective about how compounding is going to work. So if you invest 120 rupees every week for the next 45 years, it will become 1 crore, 1.14 crore essentially. So just 120 rupees per week for 45 years. In our case, it's not going to be 45. In our case, it will be, let's say, 25 plus 45. That will be 7, roughly close to 70. By the time we become 70, we will get this much amount. So in our case, it's going to be 25 years, or let's say 30, 35 years instead of 45. So our weekly SIP amount is going to increase. So let's imagine, let's say 200 rupees per week for next 30, 35 years is going to become 1 crore. And just calculate how much money you want by the time you retire. So just start investing that much amount weekly, I would say. Okay, so this, I would say, is the last topic that I want to cover today. I'm not sure how much time we have. I think we have only 60 minutes to wrap all these things up. So I'll just try to keep it down to 60 minutes. This is one of the most important uh, slide, not slide, but concept when it comes to investing. And I will suggest you that those who are trying to plan for their retirement should consider asset allocation as the most important step in their investment journey, because there are going to be different assets in which you can invest into. Let's say you can invest by buying physical gold, so silver, and so on. You can buy land. Uh, you can buy these paintings, arts, stamps, coins, etc. Or you have certain financial products which are well regulated, highly regulated, I would say, which are stocks, bonds, and commodities, etc. So these are various assets that you can invest into. And typically, let's say real estate, I would say it's a very good form of investment. You can get really good returns from real estate, but the real estate prices will rise once in a blue moon, let's say. Typically, real estate cycle is around 30-35 years. So in 30-35 years, price of that land will appreciate once, and I mean it will become, let's say, twice, thrice, four times. You don't know, but it will multiply, but it will take a very long time before it multiplies rapidly. So every asset has certain risk or time duration of their cycles, and they will give certain returns, and they are going to have certain risks along with that. And the aim is to get all these assets in a certain weightage or proportion so that you can get that good sleep in the night without having to worry that you are losing money tomorrow. Just to give you an example, let's say you are investing into stocks, okay, and you put all your savings account money into the stocks, and tomorrow the stock market crashes by 5-10% and so on, and you suddenly, let's say you put 10 lakh rupees, it falls by 20%, it becomes 8 lakh rupees, you have lost 2 lakhs in a matter of weeks. I'm not comfortable with that. I would say I want to sleep at night. I don't want to be worried about my wealth getting deteriorated so fast. So I would put it into these separate assets, and that thereby ensuring certain, let's say, so basically you are trying to reduce the risk essentially. Uh, Not an important slide, looks very complicated, but is very simple. कुछ नहीं है, एक ग्राफ है, ग्राफ के एक एक्सिस पे रिस्क है, y एक्सिस पे रिटर्न है, and just to explain, you will see a cash, you will see a dot saying cash at the left bottom, essentially saying that there is very less risk if you actually are holding cash in your, let's say, if you are holding cash, you are not going to lose it tomorrow, right? उसकी value कम नहीं होने वाली immediately. So there is very low risk in holding cash, but at the same time, if you are holding 100 rupees today, 1 year down also you'll be holding 100 rupees. There is no return. So the cash is like very close to the center of x-axis and y-axis. Um, as you start taking more risk, your returns start to increase. So basic funda is high risk, more return essentially. You will see that as you will see that the gold is present over there. Gold is more riskier. The value of gold can fall, it can rise as well. Um, it has slightly more risk, slightly more return, and similarly, all other assets are actually plotted on this graph. Okay. And what the theory says that if you have these different assets in certain weightage, you can arrive at a portfolio, and you can see that curve being drawn, and they call it something like efficient frontier. Not important, but the whole point is have different assets in certain proportion such that you are reducing your risk and increasing your returns. That's it. Uh, so essentially, what I'm saying is, if you look at bonds, then it is less risky than having stocks because stocks is further right on the x-axis and so on. So how you should do your asset allocation? This does sound very scary. Okay, for a beginner, how you should do your asset allocations? I would say divide it equally. Just a simple way would be to divide it equally. 33% of your funds, let's say you want to buy stocks, you want to buy debt funds, like you want to invest in FD, you want to invest in stocks, you want to invest in gold. How would you put the money in on it? So I would say divide it into three parts equally. If you have, let's say, 1 lakh rupees, put 33% of that in equity, put 33% of that in FD, put 33% of that in gold. Okay, so that's one way to do it. There is another simple yet powerful rule of thumb is that let's say your age is 20, X, then you should put 100 minus X in equity. So let's say I am 25 years old, then I should put 100 minus 25. So 75% of your money can go into your equity, 25% can go into your, let's say, FD, and so on. And as your age increases, you can reduce your money that you have put inside your equity or stocks, reduce it slowly. Let's say when you become 30, you can put 100 minus 30, that is 70% of your money can be in equity and 30% can be in your FD. So as you age, you would like to make your portfolio less risky, so invest less in riskier assets like stock and invest more in non-risky assets like FD. So this is something which I have been following for a long time, and I feel I am much more insulated to what happens in the stock market, and I do not lose my sleep over it. So just to give you an example, if you are making 50,000 per month and you save 20% of your salary, and that is like 10,000 rupees that is saved, so you can put 7,400, that is 74% in equity, 20% in debt, and 6% in gold. So some asset allocation is done into different asset classes because each asset class has a different risk reward ratio, and since we are young, we can afford to take more risk, and since we are investing in long term, so it's fine to put more money in inside equity right now. And as you age, you can reduce that and start putting it in other assets like FD and gold as you age. uh, okay, I'm just not sure because we have run out of time what will happen to the Google Meet, because I think it's only valid for 60 minutes. So let's see. Not sure what will happen. But okay, what do you need to invest in stock market? Only three things are required. Savings account. Uh, you are going to transfer money from your savings account to your, let's say, trading account. So you need one savings account where you can put money, or you can take out money from your stocks and put it inside your savings account. So you need one savings account. You are going to need one trading account. Trading account is the place where you buy and sell stocks, where you can buy and sell stocks from. And then you are going to require one demat account, which is the holder of the stocks. So if you buy certain stocks, they are going to be kept somewhere, right? So that is kept inside your demat account. So तीन account चाहिए, savings account, trading account, demat account. There are special, let's say your bank like ICICI, Kotak Bank, etc. will provide these three in one accounts, wherein they will provide all these three accounts to you. I highly recommend you that you do not go for these kind of accounts. Instead, you should open three accounts separately. Okay. So to open trading account, I think I would recommend you to download apps like Grow, Kuera, or Paytm Money, etc., or Zerodha for that matter. So you can open account here, and then you can start buying and selling stocks. To buy and sell mutual funds, you are going to require again an app, an aggregator platform. Either, okay, you can actually buy it from the company who actually sells you mutual funds. So you can buy it from, let's say, Kotak or ICICI. These are the ones who actually make mutual funds as well. Or you can buy it from an mutual fund aggregator platform. For example, Zerodha. Zerodha Coin is one app. Paytm Money, Kuera Grow, etc. and so on. So please have all these accounts with you. It hardly takes any time in today's world. I think in less than 15-20 minutes you would be done. So get these accounts. Okay. A couple of things that I just feel are important. Uh, at least when you are investing from long-term perspective, you are building that retirement corpus. Is you don't have to time the market. Okay, you don't have to buy that mutual fund whenever market is down. Let's say, okay, you don't have to buy something when someone is telling you or giving you a tip, or you don't have to do intraday trading or any of these form, or you don't even have to buy a particular stock. because that becomes too risky. Do not do any of these kind of things. Um, Instead, you should just for your retirement money, you should just buy an index mutual fund. So I will name certain mutual funds which invest in index fund. So you can just start investing into that without having to worry about anything. So a couple of things which I feel are still important with your retirement money. Get that split right. Okay. So like I said, when you are 25, you should invest 75% into equity. So getting that split right is important. Starting early is important because as you saw, for a person who starts investing at the age of 30, we almost built a retirement corpus of 4.5 crore rupees. So starting early is very important. Split is very important. Then there is something called direct mutual fund and regular direct mutual fund. Then there is a regular and direct. These are the categories, and then there is growth and dividend as well. Okay, so you don't have to know any of these things. All you have to do is invest your retirement for retirement, building a retirement money. You have to invest in an index fund, which is growth and direct. So again, you don't have to worry about it. I'll just give you the exact name so you can just get started. Okay. And instruments, you don't even have to worry about them. Just keep on doing it regularly for next 20-25 years. Do not touch it, do not sell it, and don't do anything. You will build that retirement corpus very big. Okay. Um, right now, I don't think many of you might not be aware of what a mutual fund is or what does an index mutual fund mean. But I do not want to discuss that right now. We can have a separate session in which we can go into more details about what these instruments are and so on. It's very simple. If you do a hands-on exercise, you will feel that the theory part is much more complicated than hands-on exercise. Um, Maybe we can have another session for that, which will help simplify things. For me, the main purpose of today's session was to have this dialogue or discussion wherein you have these three things being done. That is setting up an emergency fund, buying a health insurance, and buying a term insurance, and understanding for your age and for your risk profile what is the asset allocation that is going to be. Okay. And once you have all these things into mind, maybe we can have another session wherein we can just have a where we can just pinpoint what should you do and what should you not. Uh, and I think this is the last slide that I want to cover. I don't even want to go into a lot of details here right now. Just one thing that actually occurred to me, or actually I read somewhere, is focus on earning money and not returns. Okay, so at in the early stages of your career, let's say once you start, once you get out of the college, you get your first job. Okay, let's say it is you earn about 20,000 from that job. Just to give an example, okay, 20,000 is not a big amount. You are going to spend 85-90% of it just to fulfill your expenses. Okay, um, and you are going to save very minimal. Let's take an example. You have 30,000 as salary, you spend 25,000, and let's say 5,000 is you spend 25,000, 5,000 is what you save. You put that into an FD. The FD is going to give you 5% return, let's say. Okay, so that is around 250 रुपीज एक साल में एफडी में रखेंगे 5,000 रुपए तो आपको 250 रुपीज मिलेंगे. If you put that money in stocks, it is risky. You might, on an average, you might get about 10% return, let's say. तो 5,000 पे 10% मतलब 500 रुपीज मिला एक साल में. So you are essentially getting 500 rupees more in 1 year. Okay, that is like 30-40 rupees a month. It's not worth it. Okay, so first thing you should do is focus on making more money at this point of time. Um, let's say you would like to take a course, spend 10,000 rupees, take a course, do on, let's say, digital marketing, get a job which is going to pay slightly more than what you are doing right now. Instead of 25,000, you might get a job which is 50,000. Okay. Now, initially, let's say, initially you are making 3 lakh rupees per annum. Now you are making 6 lakh rupees. That is 100% return, I would say, in an year. There is no mutual fund which is going to give you more return than this. So, for the people who are not earning as much as they want, I would suggest investment is not an option. Instead, focus on building skills and getting more money. That's the first part. And once you start having this decent amount of money, or you save enough for a very long time that you have enough money, then you can start thinking in terms of allocations, like how much should be in equities or stocks, how much should be in FD, how much gold should I buy, and so on. And then you can focus on getting the right right assets in these different asset classes. So I think that is all I have for today. Um, I think for those people, let's say, who want to invest right now, uh, what would you? Okay, I think this is one. I'm not sure if can you see this slide. Uh, yep. Okay. So essentially, this is what it is. तुम्हारे पास कुछ पैसे हैं सेव किया हुआ है आपको इन्वेस्ट करना है. Take this decision. Do you have time, inclination, or an ability to actively invest or manage these investments? I do not have that. I'm way too busy with my day job. I would like to just do a passive investing where I invest in a certain thing and let that grow. Okay, so for you guys and for me and for people like me, the best way to invest in stocks is using index funds. So, what I personally do is I invest in three funds. I will give you the exact names. Similarly, I also invest in FDs. I will give you the exact names. I would recommend you also do it in this way if you do not have time, inclination, and ability to invest. More on that maybe in the next session. And if you still insist that you want names, then these are the list of names. So maybe I can put it in chat. So these are the exact names. अभी आप जाके ग्रो पे या फिर कुवेरा पे इन फंड्स का नाम सर्च करोगे तो ये फंड्स आएंगे. All you have to do is go and buy these. Every month you are saving, let's say 10,000 rupees. Set your age is 26, so 100 minus 26, 74%. 10,000 का 74% is 7,400. तो 7,400 को इसमें डाल दो. Do it for next 25 years. I think you will have a really big amount for your retirement. You would not have to worry about anything. So that's it from my side. Um, Not sure if you guys have any questions at this point of time. So I'll just stop sharing my screen and turn on my camera. Okay. So what do you guys think? I hope you learned something today. Uh, any reviews, anything? I think it's open for now discussion and all. You don't have. Okay, cool. Okay. Mhm. Yep, no problem. Happy to help. Uh, Actually, like, हाँ भाई, बोला. Yep. Cool, cool, cool. No problem. I think what we can do is like you do all these things, and then we can have one session where we do a hands-on on where you should invest, exact names, exact scripts. And once you do that, I mean, this is what I will do. So you can just do something similar to that. and I think you will be good to go. So करते हैं. Uh, really excited to see you guys coming here and hmm, right, 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 right. हा म्हणजे जर तुमच्याकडे तुम्ही कर्ज घेतलंय and if you have dependents only then it makes sense to buy of term insurance and if you do then you should definitely start early. मतलब my plan is to get a term insurance this year, so I have done extensive research on what I want to buy and where I want to buy from and all those things. So yes, at my I mean लोकल एजंट कडून तर नाही घेते सध्या. म्हणजे माझा तर असा विचार आहे ऑनलाईन देर आर कपल ऑफ थिंग लाईक आता तू डिटो इन्शुरन्स म्हणून आहे बघ और देर इज वन एश्योर अँड सो ऑन सो करणार आहे. बट दिस इज जस्ट व्हॉट आय हॅव गॅदर्ड विथ माय ओन रिसर्च राईट नाव. नॉट शुअर इफ आय हॅड इनफ टाइम टू कम्प्लीट एव्हरीथिंग बट या. हा हे जस्ट फॉरगेट रेग्युलर बेसिकली इज लेट्स से तुझ्याकडे कोणी एजंट आहे तू एजंट कडून घेतलास एक म्युच्युअल फंड्स ओके. एजंटला काहीतरी कमिशन द्यायला लागणार आहे राईट. द कंपनी हॅज टू पे सम कमिशन टू एजंट फॉर हिज वर्क. सो युअर रिटर्न्स तुझे रिटर्न्स जे आहेत ते अफेक्ट होणार कारण की तुझ्या त्या रिटर्न्स मधून थोडा पोर्शन एजंटला जाणार आहे इसेन्शियली. सो दॅट इज अ रेग्युलर म्युच्युअल फंड वेअर इन यू गेट इट फ्रॉम एन एजंट. राईट. ते एक्सपेन्स रेशो तेच करतात थोडा जास्ती पैसे घेतात तुमच्याकडून so that they can pay off these other people. So you should always invest in a direct म्युच्युअल फंड्स कारण की तिथे काय मिडल मॅन नाही आहेत. त्यांना कमिशन कमी द्यायला लागणार आहे. त्यांना ऍडव्हर्टाइजमेंटसाठी कॉस्ट कमी लागणार आहे. सो इट्स बेटर राईट. ऑलवेज बाय अ डायरेक्ट म्युच्युअल फंड and you should always buy growth based mutual fund. Growth based and dividend are the two forms. Basically ज्या म्युच्युअल फंड मध्ये तुम्हाला दरवर्षी काहीतरी पैसे तुम्हाला परत दिले जातात and instead of giving it to you they reinvest it back into the stocks. So that is a growth based mutual fund. तुम्हाला काही पैसे भेटणार नाही एंड मध्ये डायरेक्ट पैसे भेटणार. दॅट इज अ विच इज आय फील डायरेक्ट अँड ग्रोथ. these are the two mutual any mutual fund you buy you should buy these at this point of. हाँ भाई. हाँ म्हणजे करणार ना. फॉर एक्झाम्पल तुला एक जस्ट जस्ट टू गिव्ह एन एक्झाम्पल. लेट्स से तू एका म्युच्युअल फंड मध्ये इन्व्हेस्ट करतोस ओके. सो द म्युच्युअल फंड इज मॅनेज बाय अ very good people let's say and they are doing a lot of research to buy stocks and sell stocks. So definitely they are going to charge you higher management fee for that managing that mutual fund. Okay. So let's say if you invest in index funds let's say you get a return. Index fund मध्ये म्हणजे बेसिकली जे निफ्टी फिफ्टी मध्ये स्टॉक्स आहेत त्या फंड मध्ये इन्व्हेस्ट केलंस तर तुला 10% रिटर्न भेटेल. बट हे जे म्युच्युअल फंड आहेत ज्याच्यामध्ये ऍक्च्युअल मॅनेजमेंट does a lot of research. So they are going to give you a return of let's say 12%. Okay, slightly more, 12% dila. Now since they said I did a lot of hard work, I want some management fee. So let's say they charge you 2.5%. So 12% return dile पण 2.5% गेले पण तुझे. So that is what basically the management fee is. Uh, it should be typically as low as possible. नाही तर 12% मधून 2.5 गेले तर तुझ्याकडे 9.5%च रिटर्न भेटतं. So typically idea is to keep the management fee low. That's one thing. And second thing is management जास्ती fee का घेते? Because they have the ability to outperform the market, to outperform Nifty and Sensex. So these are like two sides of the same coin. नाही हा म्हणजे टिपिकल रूल ऑफ थंब असं अज्युम कर ना की मॅनेजमेंट जर जास्ती मेहनत घ्यायला लागले टू गेट यू बेटर रिटर्न्स then they will typically charge you more money, so more expense ratio. Okay, that's one thing. But the drawback of this is even though रिटर्न्स तुला मार्जिनली बेटर रिटर्न्स देत आहेत नॉर्मल म्युच्युअल इंडेक्स फंड पेक्षा, पण मॅनेजमेंट फी जास्ती असल्यामुळे ओव्हरऑल तुझे रिटर्न्स कमी व्हायला लागले. सो इट डज नॉट मॅटर की टिपिकली आय वुड से म्युच्युअल फंड बाय करत असाल तर तुम्ही इंडेक्स फंड्सच बाय करा. त्याच्यामध्ये एक्सपेन्स 2.5% टिपिकली म्युच्युअल फंड मध्ये असतो. इंडेक्स फंड मध्ये एक्सपेन्स रेशो असतो 0.02% बेसिकली, विच इज व्हेरी लो, ऑलमोस्ट नेक्स्ट टू नल. So always go for index mutual funds. Right. Exit load does not matter. Exit load is basically to discourage you from selling too early. That's the only thing. की एक वर्षाच्या आधी तू जर म्युच्युअल फंड सेल करतोयस तर ते बोलतात की in one year you are not going to get enough returns, right? So they want to discourage you from selling it. That's why they'll take 1% exit load or something. After 1 year they will not even take exit load. So that's the funda.